Hello, everyone, and welcome to today's National 8A webinar. I'm Melissa Saz, the Deputy Director of the National 8A Association. We are a nonprofit with a mission to provide education and guidance for all aspiring current and graduate 8A businesses. We are also proud to work with minorities, HubZone, veteran-owned, women-owned JVs, federal agencies, prime contractors, and industry professionals. Before we begin, I want to let you all know that today's webinar is being recorded and all presentation materials will be posted on our website. If you would like to ask a question, please use the chat box or email events@national8aassociation.org. Today's session will be on funding your business, financing options for your small business. And we're excited to have both Edward Spenceley and Teresa Moon presenting with us today. Edward Spenceley is the Senior Vice President, Government Contracting and Veteran-Owned Business Specialist at Bank of America, and Teresa Moon is the Business Development Manager at Parabilis. So without further ado, I'll pass the mic over to Edward, so we can kick us off.
Right. Well, thank you, Melissa, and thank you to the National 8A Association for having me. It's a pleasure to be here. Great organization. As they know, I have a huge passion for 8A companies, both during their time in the 8A and especially afterwards when they graduate, and help them get there. So you see our session summary here. Really what we're going to talk about today is setting up your company for success by understanding traditional versus non-traditional lending options as you move through your business journey. And I think that's important to talk about the business cycle. Melissa, if you go to the next slide, please. All right, so I'm going to spend a little time here. Now, these are some words that I made up, so you just have to bear with me. Your goal is what makes you bankable makes you viable. So by generating sustainable growth model and creating enterprise value. And let me just break that down for you. So what we want to do, and you see the little chart on the bottom there, and it goes from getting started to exit strategy. Well, I'm just an old platoon sergeant, so I like backwards planning. So if I was told, hey, you need to capture that hill, you've got 48 hours, I would say, okay, where do I need to be in 36 hours, 24 hours, 12, 6, etc. So you get that idea. So what we want to do is the long-term goal, we want to be very strategic. It just makes perfect sense, right? That's my strategy, is how do I get to this long-term goal? In the interim, in between, at that 6th hour, that 12th hour, et cetera, so if you have a 5-year plan at year 1, year 2, year 3, or 4, where do I need to be? And that's when you become tactical, right? You have to use different tactics to get to your end game, which is your final strategy. Go ahead and next slide, please. All right, so we're going to start with some very basic concepts, but then really Teresa and I will get into some specifics around some non-traditional financing tactical options and traditional financing strategy options. So, what you see on the scene here and on the screen here, and I've talked about before, is, self-funding. So self-funding sounds good. It's not everybody has access to that type of thing. So you've got, if you've saved, you may have poured in all your dollars already into starting up your company. If you have, equity in your home and you do a credit line to fund your company, and these are really options that I've seen clients do over my last 21 years of doing this in the government space that they've chosen. A 401k, people say don't touch your 401k. I would talk to your CPA. I've actually seen people take money from their 401k as long as they pay it back within 90 days. And I'm not a tax person, so I'm just telling you the story that he told me. He paid it in day 89 and he had no penalties from good old Uncle Sam. So that was just one way of doing it. And then, of course, friends and family. That might be quick, but it's not necessarily easy. The rich uncle may love you today and not so much tomorrow. So that's just something to think about. So when you really, as we look through that business cycle and you're starting your business, traditional banking that you see on the far right, we are much like the government in the sense that we look at past performance. We look at past performance from a financial perspective, which seems to make sense, right? Have you performed, cash flow, made money, paid your bills, got more money, created new bills, paid your bills, right? So to get to that point, and that's the strategy, is to get to what makes you bankable. Like I said before, makes you viable, right? So your end goal may be being viable. You have to sustain some bankability. But there are tactical steps to get there. And Teresa's going to touch on some of those non-traditional financing options for us.
Thank you, Edward. Thank you, National 8A, for inviting me for today as well. I appreciate, and our Parabilis team appreciates being a part of the conversation. Just to piggyback off of where Edward left off there, there is a natural gravitation and a timeline that businesses will journey through in the government contracting cycle. So we started with self-funding, moving beyond that into the next step of financing, which is where my company and our option lands you. There is a good functionality for the types of services that we provide. Prior to Parabilis joining the market, the options that were available that may be something that you've heard of in the past would be factoring or other asset-based lending. Parabilis functions as an ABL source. However, we sit in a different capacity in the way that we lend. You can keep your assets, keep your accounts receivable as your own, and process your financing through something that allows you to continue growing your business while using strategic debt to benefit your long-term goal of becoming financially stable and venturing into that bankable relationship or banking relationship, which is the next step goal. An option to use our platform or services with Parabilis would allow you to accumulate the past performance from a very basic or beginning standpoint. So if you're a new or growing business, we could be your first option to allow you to have financing on your initial and beginning contract opportunities, which sometimes is difficult to find lending opportunities with a bank at that status. So you would come to us and we'll help you establish that past performance history. We'll help you put together some financial reporting to allow you that stability for when you're moving through and growing, and putting you into that level of readiness for that next step into your banking relationship. So while you're working on your contract opportunities, you're gaining those contract opportunities, we would like to be a part of that process first. So the greatest way, and I'm going to piggyback on things that Edward has said and probably we'll get into a little bit more, is to engage with us early and often. The sooner that you talk to us in your process, the more apt we're able to follow your journey in a way that can cater specifically to the needs of your business. So our specific service is best suited for service providers and government resellers who are looking for a way to fund new projects and keep that stability going forward to show your banking relationship as you move into it, that you're ready for the options that they can provide to you.
All right, I'm just sitting here taking copious notes as Teresa speaks. So, no, those are great points. And then what's nice about having a partner in this sense is that you have your internal team, you have your inside employees, right? You've got your controller if you have one, and many of you may wear 8 hats. So you are the controller, the janitor, the business development officer. You're writing the proposals, whatever that is. But you have your inside team and you have your outside team. And as you move through your life cycle, you rely more on your outside team. Okay. Your inside team is operational and maybe a little bit strategic, but your outside team is mostly strategic, right? And then we'll get tactical based on situational awareness, right, of what's going on in your company. So again, from a traditional financing perspective, here's some basic rules that we look at. Past performance, like I said, typically any bank looks at 2-3 years of your P&L and balance sheet. And a lot of people just look at their P&L and say, I made this much money, hopefully on the top and the bottom. And they really don't look at the balance sheet. The balance sheet to us is a snapshot of the health of a company. You saw me before on another slide talk about enterprise value. Your strategy is to always build your enterprise value. At the end of the day, that's what's going to matter, right? It's just like you hear about large companies. What's their stock price? What's the return on, on the investment in an investable, Raytheon, CACI, Lockheed, Boeing, all those others, right? So we want to look at that, and typically we look at personal guarantees, and especially in new relationships. We have many relationships. We have about 14,000 government contractors that I cover across the country, and that's excluding the large primes that we bank. But really, we look at personal guarantees, whereas non-traditional, maybe non-recourse, meaning they're not looking at you to personally guarantee. They're looking at the transaction and what you're doing. So it's really a historical viewpoint, with additional insight on forward-looking backlog and pipeline. And let me just say what that does for us. We look backwards first. We're looking at what you've done from a past performance perspective. Then we're looking at what your backlog is, to sort of solidify future expectation, right? We'll just call that projections in that sense. And then we look at your pipeline for further down the road to see, okay, here's additional opportunities. I'm going to tell you something I love, and Teresa said this early and often. I love when a client calls me and says, hey, Edward, we just won this award. Well, I love them a lot more when they call me and they say they're bidding on it. Because if they call me when they're bidding on it, we are engaged early. We can be strategic. We can look at a proper structure. We can do things like support you by a financial feasibility letter that you can turn in with the RFP, right? That type of thing, so that the government, your client, has a good idea of, oh, these guys have support. They have access to capital, right? It's good to do that before than after, right? Or during the process of an award, and you go, yay, we won. It's Cinco de Mayo. You win an award today, you're going out, you're drinking margaritas and Coronas, I guess. That's what we do on Cinco de Mayo. And then you wake up tomorrow and go, oh my God, we won. Now what do I do, right? If you just go to the next slide, and I think this is really important information. So, government contracting, and I say this all the time, is really two things, relationships and reputation. That is really what runs government contracting, right? When I talk to people who don't do government contracting, and I use terms like frenemies and co-opetition, and I try to explain that, yeah, yesterday these guys teamed up and bid on a contract. Tomorrow they're bidding against each other. People just shake their heads and go, how does that happen, right? So it's important that your financial relationship, because we're talking about finance today, do they understand your industry? I tell clients all the time, they say, Edward, this is who I'm banking with. They don't really get what I do. They just know that we're making money or the potential to make money. We're really, it's your turn to educate them. If you're looking at a service contract where you're invoicing every month and you're paying your employees every 2 weeks, you explain to them how that fixed firm price contract works, how you get paid, what the deliverable is. You want buy-in. That's creating a relationship, right? Is buy-in from those partners. Do they know the people you need to know? That's another key one. Are they interacting with CPAs, attorneys, contracting officers? I mean, I think I have 3 halves to my day, as I like to say. The first half is supporting the bankers, the 700 bankers across the country that are looking at government contractors. The second half is supporting the teams that are writing up credit approvals. And the third is everybody else in the industry. So it's the attorneys, the CPAs. I speak to contracting offices all the time. I've had the opportunity to write 5 or 6 different RFPs. So from a financial feasibility perspective, I understand what your client is looking for, and in turn, use that information to coach my clients on, okay, this is what we want to present, right? Just like a DCAA audit, the DCAA is looking for your accounting system output, what it presents. We're doing the same thing. We're looking for what do your financials present. The government is looking for what does your proposal present, right? Does it meet all the scope of work, and does it add value? And then that last bullet point, I can't say it enough. Engage early and often. I have clients that just do check-in calls. Much larger clients, we do quarterly calls. We look at their PWIN, we look at their waterfall. And what happens in conversations like that is somebody will say, hey, we're looking at this contract, it's coming up. I'll say, that's great. The incumbent on that contract is my client. They're no longer 8A. They've graduated. And how would you like to meet them? Because they need a small 8A to prime that contract. And what I tell them is, 49% of something is better than 100% of nothing, right? So it's really the industry knowledge is much more important than just the banking knowledge. Banking to some extent is the day-to-day banking, but understanding how it interacts with the government space is more important. Teresa, do you want to follow up on that? And I'll say this. Teresa said something very important, and it's in my notes here. Yeah, we're going to fund this for you, but we're going to show you how to create the financials, how to look forward so that, and Teresa's going to be the first one to tell you, you know what, you're ready. Call Edward back or call your banker back. You're ready. You can now get traditional financing. And that's really the quote unquote long-term goal in your business cycle, is to have traditional financing because it's cheaper, it's easier to adjust. If you go up and down, you get a bigger contract. It's just much easier to do if you have that relationship.
Absolutely. Thank you, Edward. I appreciate that. And you're absolutely correct. And the biggest takeaway from this portion of the conversation, I think, is the fact that what we're presenting to you today is unique in that a financing relationship doesn't always come with the knowledge of your industry. The one thing that Edward and I both bring to the table are businesses that are backed with employees and representation that actually understand government contracting. Edward leads his team and coaches them to understand what a government contracting opportunity looks like and to come to him for coaching for any advice that they need if it's something that's outside of the realm of their expertise. Parabilis was established by former federal contractors and veterans, so they understand the seat that you're sitting in right now. And we've developed our plan to take you from an infantile status, whether you're a brand new business has never interacted with a contract opportunity before and you're growing, or you're having exponential growth and your banking relationship may want you to work with us for a little bit in partnership with them. So what we bring to the table in a unified front are both understanding of the financing options available for government contractors, but both the understanding of the government contracting industry in and of itself. So that's a partnership that you're not going to find anywhere else. You can't walk into a branch in your local town and find a banker that might understand what it means to go after a contract for PPE or a contract that supports Army initiatives for database upgrades. But you will find in partnership with myself and Parabilis, or a partnership with the Bank of America bankers and professionals, an understanding of how government contracting works, and partnerships throughout the different industries that support government contracting, such as CPAs and attorneys and contracting officers that are going to help take you to that next level. So where we fall into line is we're going to help you establish yourself. We're going to allow you to get those prerequisite opportunities under your belt, help you put together adequate, substantial financial records so that when you are ready to take that next step, we not only have the partner to refer you to, but you have the things in line that are going to make it easier for you to make that transition with your banking relationship.
Yeah, the one more thing I'll point out, because I know we're getting to Q&A time. So the one thing that I'll point out is, we talked about being strategic. So let's think about this. Many of you on the call might be, well, I just started my company, and this guy's talking about selling my company. Well, let's think about this. Remember, the plan is, I got to take the hill in 48 hours. If you create a plan today in your mind that I want to sell my company in 5 years, and this is what I want to sell it for, I'm going to be happy for the rest of my life selling this company and walking away with this. Well, automatically, you start thinking about, okay, where do I need to be in 4 years, 3 years, 2 years, right? And then 1 year. And what that's going to do is change what you do tomorrow. It changes your outlook on what you do tomorrow. So let's think about this, the 8A program in particular, 9 years, I like to call it hump day when you get to year 4.5, because now you're going to the other 4.5 years, right? To graduate 8A is tough to do. A large percentage of people do not, right? They come out of it and they just end up with, yep, I've got trailing contracts. I'm a subcontractor on 8A set aside contracts, and I really have nothing else, right? So, those last years, 9, 8, and 7, what percentage of my contracts are full and open, versus set aside, 8A, veteran owned, woman owned, African American owned, Hispanic, whatever the set aside is, hub zone, right? What is full and open? The goal is to get to those full and open contracts, right? So again, you want partners who are always thinking strategically. I've had clients call me and say, Edward, we're going to do this. And I say, well, wait a second, that's not part of the plan. So it's nice as the banker to say, no, I know I don't work for you. I work with you. And I said, that's not part of the plan. How does that fit into the plan? Now, if the plan is adjusted, because the battle has changed or whatever, the cycle has changed. Yeah, I understand that. And then Teresa said one thing that's also important is that the type of functions that she does for clients and I do are interchangeable. So you may say, hey, I got 2 years, 3 years under my belt, I'm bankable, and I'm working with this bank. And all of a sudden you go, hey, I won this award. And the bank says, well, wait a second, that award doubles your total revenue. You've got a concentration issue now that's 100% concentrated in this one new contract. A bank from a risk perspective may not get comfortable with that, right? So that's where having these relationships ongoing, where you go, hey, Teresa, I need you to cover this contract for 6 to 12 months, 6 months, whatever it is. It's a long-term contract. You think about this. Well, the cost of my funds is a lot more, Edward. Yeah, but it's for a very short period. If I'm making 10% on a contract year over year, and even if I pay more than 10% for 6 months, well, guess what? I get 4.5 years where I'm making up that difference pretty quickly, right? And it gets you the past performance, and it gets you the access to cash that you need. So I'm going to stop there because I think it's probably Q&A time. I can't believe I don't have people on the call already, like Melissa, going, Edward, it's time to stop. But really, I like to say this all the
People are
time.
being shy without questions.
Yeah. So, and I say this all the time. Any question, anytime. Don't have to have a relationship with us. Don't have to have a relationship with me. So let's start one. Don't care what the question is. Many times I get a question and I go, oh, I know that contract. I know that contracting office. I know the incumbent. I know that prime, right? Think about my network is your network, right? The 8A, we had a great, our last event, I think the last time we got together was in New Orleans, which is always fun. But out of that meeting at the National 8A Association, we took a very small young 8A, just over a year old, introduced him to an Alaska Native Corporation 8A, and introduced them to a large prime that worked with the government. The three of them did a teaming agreement, and in a year and a half, they've produced one $100 million task order for an agency, and they're working on their second one. I won't name the agencies, but that's what they did. And this is a person who's in their third year of the 8A program. He will probably self-graduate, but that's a great thing to do, right, from a success perspective. And the best thing about this client is that he is picking up new 8As and mentoring them on the steps that he took. So that's part of your network too, people who know your industry.
Okay, great. I think this first question comes to me. It says, I know traditional banking loans can take a long time. What's the typical timeline in getting funding? And to piggyback on that as well, typically it's a higher cost for non-traditional financing, and being a small business, talk me through how I can grow on the long term with your support. Okay, those kind of go hand in hand. So we'll work backwards with it. Typical timeline in getting funding with us is going to depend on you, and Edward can agree with this as well. We're going to have a list of information that we're going to need to collect from you, and that'll help the process get into underwriting quicker. So we typically tell prospective clients that we're working with that we can get you funding within 2 weeks. We can turn it over faster than that if you provide us with the information that we need in order to get it to our underwriters at that time. We are a secured private lender, so we function very similarly to a bank. But the difference between us and a bank is that we'll take on the risk that the banks can't because of the financial covenants and federal regulations that they're held to. So that's the biggest difference between us and traditional financing. We're going to take on the higher risk. And with that higher risk is an additional fee for being able to have that type of funding in a timely manner when you need it, and at a time where you can't qualify for it, if you will, at the banking level, which is the achievable or the next level achievement that you're looking for. Why is it affordable? Because to Edward's point, like he said earlier, it's for a portion of your contract days that you're utilizing our option. It isn't going to be for a long term. We don't like to refer to ourselves as a stepping stone, but we're not going to be a long-term relationship with you aside from getting you steady and providing you with more resources beyond the tip of our nose. So it's affordable because you're either going to take a loss by getting yourself in a shortfall with cash flow because you didn't move into a relationship where you paid a little fee while you were utilizing someone else's money. We like to refer to it as the strategic use of debt. So while you're utilizing someone else's money to fund your working capital, your operating expenses, your payroll cycles before you actually get paid by the federal government, we are going to ask that you pay a certain percentage of it, just like you would with the bank, just a higher fee for it. So it's a nominal fee for a shorter period of time. And then once we get you up and mobile and bankable, we have relationships with Edward and his team that we can move you towards with the financial records that he's going to need and the past performance history that we've allowed with our help in funding allowed you to work through and provide him with those key requirements in order to qualify for that end result of bankable and banking relationship.
Yeah, and I'll just touch on that a little bit, if I think we have a minute, is, looking at, so, and here's where I come up to a lot of this. I have calls that are what I'll call a cold call. Somebody I don't have a relationship calls me and says, hey, we are bidding on this contract. We need a financial feasibility letter. Well, if you don't have a relationship with us, that's a hard thing for us to produce, right? And even some existing clients who have, let's say, a $1, $2, $3 million line, and the contracting office is looking for a credit line that's larger than that, right? 4 or 5 million bidding on a contract, or 1 to 2 million is a great example. I had one of these several months ago. Well, it's even at the bank, it's going to probably take, 3 to 4 weeks to move you from 1 to 2 million. In the interim, with partners that we have, like a Teresa, they may be able to get your information very quickly and get you that financial feasibility letter so you can bid on the contract, right? So you can leverage that relationship. At the end of the day, if you win, Uncle Sam doesn't care who you get the money from. And in the interim, you put into your bank and you get your increase to your credit line so that, somebody can't turn around and say, well, they didn't really have the credit line in place. Well, yes, we did. We actually had 2 options, and we used both of them. we leverage both of them to make this happen. So I'll just touch on that.
And one last thing, there was one portion of it that I failed to go over just real quickly because I know we're at timeout, but what differentiates us from the other alternative lenders would be the lending basis that we allow you to borrow against. You can borrow against your accounts receivable and only borrow what you need. So we're not going to buy your invoice for you, say for $100,000, and make you take that entire amount and then lose your invoice or your portion of your equity there. We're going to allow you to borrow only what you need from that invoice, and that's it. We also allow you to borrow against your delivery orders for up to 6 months, and we allow you to borrow against your unbilled labor, which both in other options, say factoring, you wouldn't be allowed to borrow against those other two bases. So those are the biggest differentiators between us and other non-traditional lenders.
Melissa, it's probably back to you. So.
Yes. I want to thank you both, Edward and Teresa, for joining us today and giving us all the financing options our small businesses have and your insider tips. I'm sure everyone on today's webinar found this very helpful, and to those who will be listening to the recording later on as well. So yes, thank you both. And this concludes today's webinar. I hope everyone will join us next month in our next webinar series on June 2nd. And thank you again, guys.
Hey, thank you, Melissa.
Thank you.
I also just saw 2 questions pop up, and I will address those. If I can get your contact information, happy to do so. So thank you.
Margaritas.
All righty.
Thanks, everyone.
Thank you.
Bye.